First of all, we want to know what assets are. An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. Assets are reported on a company's balance sheet and are bought or created to increase the firm's value or benefit the firm's operations. There are many types of assets, for example, current, fixed, financial, and intangible assets. In my work, I want to talk about the difference between tangible and intangible assets. The purpose of defining any asset as tangible or intangible is to drive proper business decisions, allow the business owners to maximize the benefits inherent in owning the asset. The best way to remember tangible assets is to remember the meaning of the word tangible, which means something that you can feel with the sense of touch. Assets which have a physical existence and can be touched and felt are called tangible assets. The main difference between tangible and intangible assets is where one can be touched and felt, the other only exists on paper. Tangible assets refer to the long-term physical assets owned by the organization which has a positive economic value. Organization acquires such assets in order to carry out business operations easily and not for the purpose for sale. Intangible assets don't have a physical existence and can't be touched or felt. Intangible assets can be either definite or indefinite, depending on the kind of an asset in question. Tangible assets can include both fixed and current assets. Few examples of such assets consist of furniture, inventory, computer system, homes, machines, and so on. Intangible assets, and its name indicates, are the long-term incorporeal assets owned by the organization which have a precise commercial value. It consists of trademark, copyright and intellectual property, agreements, brand, internet domain names, etc. Such assets are expected to create future cash flows and income. They are reported at their net book value, and the gross price of the asset less accumulated amortization. Some economists feel that intangible assets are much more valuable than tangible assets, especially as we continue to transition from a finally based to a knowledge-based economy. Examples of intangible assets: logo, copyright, brand value, self-developed software, customer data, trademark, etc. Key differences between tangible and intangible assets are: an asset purchased or acquired by a company which is had monetary value and is physically present is called tangible assets. An asset which doesn't have materials existence and have a useful life and economic value is called an intangible asset. The reduction in value of tangible assets is called depreciation, and in intangible assets, it's called amortization. The existence of tangible assets is essential for the functioning of a company, whereas non-existence of intangible assets will not have that much impact on the company. The value of tangible assets adds to the current market value, but in the case of intangible assets, the value gets added on the potential revenue and worse. So, nowadays many world companies record both tangible and intangible assets. Both assets are recorded by the company in the books of accounts. Tangible assets are very important for any company for a smooth running of their operations. Intangible assets help in creating future worth of a company and provide a company with its identity through its strong brand name.